Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, I'm Vinay Joseph, and on behalf of Standard Chartered, we wish you and your loved ones a happy, healthy and prosperous 2026. Welcome to the Indian Market Outlook 2026 mini podcast series, where we cover our 2026 outlook titled Ride the Recovery Wave. First, a quick recap of the year gone by. Now, 2025 was another year of positive returns for Indian risk assets. But this masked volatility and underperformance of Indian assets this year. The benchmark Nifty index ended up 11% higher, the 10th consecutive year of positive returns, the longest positive streak ever in Indian equity market history. However, slowing growth, lackluster earnings, and elevated valuations led to muted returns for broader markets. Mid-cap index was up only around 7% for the year, while small-cap index was down around 5%. Bond investors' return came with greater volatility as the yield curve steepened sharply amid a boost to liquidity and 125 bps rate cuts by the RBI. This translated to about 6 to 7% returns across the curve for short maturity, medium, and long maturity bonds. Gold was the best asset class for the second consecutive year, up over 63%. Now, 2025 was a very strong year for global markets, with global equities and emerging markets fixed income outperforming Indian assets by the highest margin in over 2 decades. Now, with Indian markets significantly underperforming, growth and earnings likely to recover, and valuations looking more reasonable, should investors dial up risk in 2026? We believe so, and we expect risk markets to outperform in 2026 and ride the recovery wave as economic growth gets broad-based, inflation normalizes, and monetary and fiscal policy stays supportive. This above backdrop drives our preference to diversify across a wide range of asset class centered around 3 key themes. Theme 1. For equities, we believe we'll be in a scenario of reflation, revival, and rotation. We expect a reflating economy to drive an earnings revival, leading to rotation into Indian equities by foreign investors and domestic asset allocators. We are overweight large cap and mid cap equities, and within sectors we like consumer discretionary and financials. Theme 2. We prefer bonds over cash, given the absolute yield on offer is much higher. Within bonds, we are overweight short maturity bonds and high quality corporate bonds. Theme 3. Portfolio diversifiers, which would be hedges against downside risks. Now, gold and multi-asset strategies are key portfolio diversifiers in our view for 2026. Finally, on risks, downside surprises to domestic growth and external headwinds in the form of US trade tariffs, disappointment with AI, and policy reversals are key risks to monitor as we go into 2026. That's all for this first episode of the podcast. Stay tuned for the entire series where we delve in greater detail on our macro and key asset class views. If you like a copy of the report, please reach out to your relationship manager, or you can find it on our website or on SC Invest. If you like this podcast, please like and subscribe. Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered relationship manager or visit www.sc.com/in.